Your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in studio in Chicago. Maybe Radigan today? We'll see. We're here for the next hour as we take you to the futures market close, 5 p.m. Eastern, 4 Central. If you're joining us on the platform, tastytrade.com, on the website, tastylive.com, welcome. Come over to YouTube, join the chat. Tell us what you think of this low volume, low volatility melt up here in stocks. It's a day of rotation where the NASDAQ is down, but basically everything else is up on a sector rotation basis of the ETFs that we track here, the 25, 24, we're in the positive territory for the session. S&P 500 technically puts in a new closing high up near 6320 or so. We find the NASDAQ off by 0.22%. But it's modest gains all around. The Dow's up by 0.36. The Russell's up by 0.48 or so. The attention in today's session really goes to Bitcoin, which clocks in a fresh all-time high here on the other side of what may be the early days of a breakout. We've been monitoring here on Overtime. We likewise have silver prices bounding up to a fresh closing high for the year. It's a 2.74% gain, actually up at 37.64, as it were. Maybe we're finally getting some legs. In the world of yields, weaker bonds earlier in the day run into a 30-year auction that, quite frankly, it didn't look that good. Foreign buyers were down a little bit. Bid to cover ratio was a little bit lower. It stopped through. That's the silver lining. Bonds do ultimately trade higher into the end of the session as well. So you get a mixed day for the dollar. Okay, there are some odd headlines out here. We're going to have to talk about this letter that the administration sent to Chair Powell about misappropriating funds for renovations to the Mariner Eccles building, perhaps as a rationale to fire Powell with cause.
Oh, good Lord.
Ilya, before we get there, though, talk to me a little bit about this equity market rally. ES keeps going. We say it's a light day. It's not even 1 million contracts traded, 876,000.
Yeah.
Do we just chalk this up to being a day that ends in Y during the summer?
I mean, we're at the previous high. So if you're not long already, the risk reward to getting long here as a trade, right? Let's very clearly anchor ourselves. We're talking about not the long-term positive drift of equities here. We're talking about, would you allocate the incremental dollar to a, let's say, 45 DTE type of a trade cycle here? No, in my mind. Very clearly not. You're at resistance. You need a break of it to have something actionable on that kind of a window. So does it make sense to go long here now? Obviously, we're in the after hours, but I suppose there's always futures markets. No, it doesn't. So in my mind, if you're going to do anything here, and I don't think you have a clear sell signal, but from a risk-reward perspective, and this is how I end up in my exposure, it makes more sense to be short than long. Because if you're wrong fast. You get a breakout, you get out. If you're right, you have asymmetric upside because there's a lot of room to fall. So in my mind, it makes sense to be tactically and in a risk-defined way with full knowledge of the fact that you're fighting a market that wants to go higher. It makes more sense to look for a pullback than it does for a breakout. But it's not telling you anything new today versus yesterday versus the day before.
Thomas, that is a fair point. We've had these ranges drawn on the 4-hour charts here on ES and NQ for the past few sessions, more or less. We haven't made any significant progress here within those ranges. It's just closer to the top. Why wouldn't we end the week with a bang where the NASDAQ gets up to 23,250 or so? What's a 1% more higher between friends?
Yeah, it's like what's the impetus for that? All the economic data is out of the way for the week, pretty much. Yeah, the bond auction. I think the focus is going to be on next week, the inflation numbers. I don't like getting long here either, and I haven't been for the whole week. I'm waiting for a pullback to get long, and volatility came down today. I mean, you could say the NASDAQ's down ES is up a little bit. So what do you take away from that? It just looks like a market that is complacent somewhat, and that's not really a time where I want to go long. So I'm keeping my exposure mostly out of the equity market for now.
I think this thing is going to chase higher. So just continuing with the chase mindset, I don't think 45 and 21 out is the right way to go. But I'll tell you guys, these things look like they're ready to pop. NASDAQ, S&P, Russell's even edging up. So I'm playing for another swing higher here tactically in the short term. 4 days to expiration, long the 23,300, short the 23,350. It's a 10-to-1 risk to reward. Risking $90, $92 technically to make over 900. It'd be a nice little swing trade here. I think we can get another pop. This thing's going. It hasn't stopped. The volume low, the volatility low. Of course, if the volatility and volume come back, a lot of people are off sides. And we're still in the seasonally positive window. This market tends to run through expiration. Some might not call that seasonality. I would call talking about expiration seasonality. And
sure sounds seasonality adjacent, though, doesn't it?
And we find ourselves, when you get through expiration next week, it happens to coincide with the average. If you look back to 1950, when do markets tend to peak in the summer? They tend to peak around July 18th. So you have expiration on the 16th. You have the seasonal peak for markets for a few weeks on July 18th. We get one more push higher here. That's a week from now. I could play a.
Also, it's right before I go on vacation, so that would be absolutely perfect.
Well, it's also my birthday. So, like, if this market wants to run up into the highs, that's a welcome gift. And so I'm going to treat myself
here. Give you a birthday gift, roll over and give me a vacation gift. Let's go. I'm with it.
Sticking with stocks here for a minute, we talked about the sector performance earlier, where it was a pretty decent session. In fact, it's only XLK minus 0.32%. That's lower today. Everything else is in the green, led higher by the metals, XME. I suppose that means we really should just talk about what's happening here in the metals. Elia, while we were going through some technical difficulties here before the show started, we did start off a little late. You were mentioning that there was this notable divergence in performances at the start of the year. You know, if we told you that, you were mentioning if stocks are up, if bond yields are lower, the dollar's getting crushed, silver, gold, Bitcoin doing what they're doing, you would think that there's some sort of anti-dollar, anti-fiat trade making its way through the system. Yeah. Because after all, even adjusted for, when you adjust for FX, the S&P 500 is negative on the year.
That's right.
Silver here today is 2.77% higher. It's the high close of the year for the metal. Is this part of that thesis?
It certainly seems like it. I think when we look at kind of noise aside, and just completely turn off headline this, war that, whatever. And we are going to delve into all of this with charts on Macro Money right after this, so definitely hang out. But it's really unmistakable. Stocks really haven't had a really big move in the first 6 months of the year. It's been a little bit greater than average, but only a little. The 25-year average for a 6-month move in the S&P 500 is 3.7%. We moved 5.4% in the first 6 months of this year. It's not exactly a screamer in relative terms. But when you look at what gold did, which is a 25.2% rally in the first 6 months of this year, and its historical average is 5.7, that's the move. So there's a definite sell America vibe to all of this. But for, incidentally, what we saw in the treasuries, because yields are in. So it's not like people are shunning U.S. securities. The other thing in the first 6 months of this year is the 2-year yield is down 12.1%. That's not that crazy. The historical average for a 6-month move is 13%. But more importantly, the 10-year yield in the first 6 months is down 7.5%. And that is offsides. The historical average is 3.7% over a similar period of time. So it's not like people aren't buying long-term U.S. bonds. They are. So what does all of this tell us? That the market is convinced the Fed is going to have to cut, that is going to have to cut more than anybody, including the Fed, expects. You're already seeing it in Fed funds futures. You're seeing it in break-even rates. The question is, well, if it's not a collapse, if it's not sell America, we're going to cut off our nose to spite our face kind of a situation, the dollar is absolutely crushed. Gold is surging, but people are buying bonds. What is that? It's a recession.
Bonds are up. Gold bounces back a little bit today, Thomas. You said that you were operating in the metals like I have been, and you're thinking about making some changes to your silver positioning to account for today's move. What have you decided to do here, assuming you're still keeping your long exposure?
Yeah, I'm still keeping my long exposure. Up until today, the silver trade wasn't working. It came back. So I was at the 18 days out with my call spread for silver, rolling it out to the 47-day, I believe. So still want to keep the exposure on there. I think this move, clears some technical boundaries. I think silver could definitely run higher. And like Ilya said, if this is a sell America thing, silver, gold, they're going to, do well if these recession fears become more prominent. I think that's where you at least want to have some of your money.
The one thing that gets in my way about silver that kind of like sticks in my craw, and this isn't the case about gold right now, but silver positioning is getting really stretched in the futures market, which granted, not the end all be all, but it's really high. I have to run the numbers again, but I think I saw like the Z-score is somewhere north of like 1.8, which is, we're chasing a little bit here. It's interesting because if you look at positioning outside of silver futures and you go to like SLV, you're looking at open interest in the options market. It's not exactly a market that's skewed to the upside. In fact, most of net positioning is actually a little bit still bearish in SLV. So I don't know if that helps us one way or the other. There's no real agreement there, but I'm with you. I'm in at 47 days still. We've been articulating this for some time and like pushing on a string, buying the call at the top of the range, and it falls back, and then just watching gains go away. It's been a little frustrating, particularly with gold. Silver here is working though, so sticking along the 38.39 right now in the SIU 5 contract, I think makes a good deal of sense. And Ilya, you mentioned it in last call because I think you were trying to get away from a little bit of a conversation here on this, but we are going to bring it up. Bitcoin doesn't look like it's topping, my friend.
No, it
looks like it's breaking.
Not
up.
today. Today we confirmed it. And there's no reason to get away from it. I'm still not going to buy it for obvious reasons, sort of thematically. But the price action today confirms it. If yesterday we were at the highs, much like we are today in the S&P or NASDAQ, yesterday we were at the high and saying, okay, if it's going to break, it's going to break, but it hasn't yet. And what it's been doing is getting stuck in a range at a time when other risk-on assets have been rallying up a storm. So what's wrong with this thing? The dollar is down a lot. It can't rally. Stocks go up a lot at the same time. It can't rally. Today it can. So it finally takes out the high here. We have a breakout. Let's see what this is. I think if you were going to be a buyer of an anti-dollar asset, I wouldn't look here, because if you, like me, expect that stocks are a better bet lower than they are higher, then you probably don't go looking for higher beta, higher volatility exposure to risk sentiment. But ticker agnostic, asset agnostic, if you just look at the price action and the chart, this is a bullish breakout.
Thomas, what can I do to entice you to join this trade and get on board with an IBIT breakout or a Bitcoin breakout equivalent to $135,000 a coin?
I think the Bitcoin story kind of plays into fears on the fiscal deficit. I think it's a place where traders kind of see, getting away from the US, perhaps getting away from those worries with reckless spending, if you want to call it that. But all these crypto ETFs that have come online have really opened the door to a lot more capital via retail and things coming in. And, in a speculative backdrop where you're going to have, chasing gains, Bitcoin makes perhaps the most sense if you're taking, those kind of tail risk bets where you can increase the alpha in your portfolio. So I think it's going to keep going up. I mean, there's been a lot of naysayers along the way for the past year or two. I mean, all the way back, but especially the past couple of years. And it just keeps proving people wrong. So, I mean, it's not something I would short.
I've been one of these naysayers.
Yeah, it's not something I'm going to short anytime soon.
No.
I think IBIT is a good way. Bitcoin futures are pretty large, but if your account supports it.
So if we think about Bitcoin issuance per day right now, I think we're looking at something around 144 coins unlocked every single day. So multiply that by 7, you're looking at 1,000 coins a week. Put this in perspective. According to the website AI Invest Coin World posting on there, the data that they have available from their proprietary feed suggests that the institutional investors, the 54 entities that they track over that same period where a little under 1,000 Bitcoin were mined, institutional investors have mopped up 8,434 Bitcoin. So there's a little bit of a buy, sell, demand, supply imbalance right now, whereas more companies are taking this onto their balance sheet as more people have access, Thomas, as you pointed out, right? I remember the first time I tried buying Bitcoin, I had to go out to a pharmacy in Red Hook and stand by some phone and wait for instructions. It was really shady. And now it's just like I can buy it like I'm buying SPY. I just punch an IBIT. So it's a lot easier. And of course, when we say institutional, that could be like BlackRock buying Bitcoin for IBIT. But this thing looks great to me. The fact that we have this, it's ticker agnostic, Ilya, misgivings aside, if things are going to get silly and stupid and we're just going to pump assets and the Fed's going to cut rates and we're going to run the deficit up, I mean, that's all inflationary.
Yep.
So what's like the single anti-inflation asset that's outperformed everything else since its inception? Bitcoin's preserved purchasing power better than basically anything else since 2009.
I mean, this is the whole issue. It's either inflationary or the market is right. And we say this because when we look at the number of rate cuts that the markets have priced in, and we look at what the bond market's inflation expectations priced into it, not anybody's opinion. What that says, it says we're not in an inflationary risk. It says we are at risk of some sort of a disinflationary outcome. And so when you look at all of that and you go, okay, well, obviously stocks don't see it yet. They're at the highs. Obviously the Fed doesn't see it yet. They don't want to lift up their rate cut expectations. They're resisting at every chance they get. But the bond market and the cash market clearly see it because the dollar has been getting absolutely shellacked. Yields have been falling all year. So with that, then, do you justify your Bitcoin long on purely the price action? That makes sense. It's a perfectly valid way of doing it. And you're absolutely right. From a ticker agnostic perspective, it's a breakout. There's no question. Or do you look at this and you say, all right, well, obviously, something here is wrong. Someone here is wrong. Either it's we're going into a more inflationary environment or a less inflationary environment, but clearly the bond market is at odds with both stocks and the Fed on what this is. This is going to resolve somehow. So am I going to take my bet on how this resolves by essentially saying stocks are so right that I'm going to buy Bitcoin and lever up?
Yes.
I'm not going to do that.
Yes. No, I mean, like, think about how Bitcoin did, though. I mean, Thomas, what did Bitcoin do in 2021, 2022? Like, the asset came in when inflation was raging the most, right?
Well, yeah,
that's when
the Fed was aggressively hiking rates and stocks were falling all year.
I would just point out that when you get back to a world where real returns aren't being eroded because of inflation, and you can then say, well, you know, they're pumping the deficit and the debt and they're pointing rates lower. What do you do in that situation? That's asset inflationary. It may not help the real economy by any stretch of the imagination, but it pumps asset prices. And Bitcoin is something that's been one of those magnets for the pump. So I don't think we should ignore the signal here, right? People are clearly reaching for risk right now if they're going out into Bitcoin to this degree. But I would posit, and I've been banging this drum for a while now, Ilya, where are the yacht parties? Where are the videos from Miami? They're still not here yet. This is not a market that I think, you know, it's gonna take another $10,000 or $20,000 to run before people start going, oh.
I just don't think this is a Bitcoin bubble. So I'm not looking for yacht parties. What in my mind you've seen in Bitcoin since late December 2024 is basically exactly the same as what you saw in the S&P 500. You reach a top in late December, you idle into the second half of February, you get a growth scare. Risk assets fall, stocks fall, Bitcoin falls. You get a crescendo in early April, you find a bottom, you bounce. You retrace all the way back. Stocks do that, S&P does it, NASDAQ does it, Bitcoin does it. Stocks have been breaking out to record highs over the past, let's call it, several weeks. Bitcoin finally decided to catch up today. So it's an underperforming asset.
You must really hit Ethereum then.
Yeah. Ethereum, the Russell 2000 of the crypto world.
It's doubled since April. Give it some credit. But look, if Ethereum's rallying, who's stopping
this one,
trade?
by the way, is actually at its high. So I don't know how well technical analysis works on this illiquid nonsense, but for what it's worth, this one hasn't broken resistance.
Thomas, you've been someone, you know, switching its attention to something else here.
Though, by the way.
Yeah, you guys, we've had this conversation in recent weeks. I just haven't put anything on here in Tesla, but I know that you guys have had discussions. Thomas, you've been fading weakness in Tesla. You did it back in early June. Dylan's been doing it, and it's been working out. This 50% mark. Forget 50% being a number, right? Just go to the platform, you click on tool, click H once to get horizontal. Just draw a straight line right around.
Horizontal line through chart, yeah.
Right, like
as we were saying, even I was looking at this as a buying opportunity. I just didn't do it because of size, but the setup was, I thought, a no-brainer. We talked about it on the show earlier this week.
There's news that XAI is putting Grok in Teslas, as Musk said. Now, there's no guaranteed timeline for it.
Oh, good. It's had a real great run this week. That Grok.
Thomas, what are you doing in Tesla?
Right now, I have a put spread on at 300, 295. So pretty much right around the line you drawn is where my put spread is. You know, it's lagged the market. It's had some of its own, you know, independent things dragging on it. Elon Musk, you know, political controversy, taking away focus from the company, et cetera, et cetera. You know, we saw back when he officially left the White House, Tesla rallied. And then, you know, he kind of waded back into the political atmosphere. And I think some investors are concerned about that. But I mean, what's been driving all of it isn't how many vehicles they deliver and stuff. It's, you know, the potential as a tech company for the future. So I think it'll get back on track there. But this play right now is just pretty much to fade the weakness and holding to kind of that technical level you drew out there. So I have 36 days left in it. I'll wait a couple weeks, you know, until it gets down to 21, 22, and hopefully take it off for some money there.
Yeah, the news that we're maybe seeing XAI put into Teslas as of next week is obviously very interesting. It's part of Elon Musk's longer-term plan to just maintain control over Tesla, because if they were to buy XAI, that's Elon Musk's company, so he would it would help him out monetarily significantly, as well as in terms of governance. It'd be quite impossible to get him out of Tesla in any form or function. So I think that's the direction that they're pushing. And yeah, I don't own a Tesla, so I'm not worried about. Ilya, what was Grok calling itself earlier this week?
It was calling itself Mecha Hitler.
Right.
And responding to messages in a very, to coin a word, Mein Kampfian way.
I would, you know, this is one of the great tweets that's going around about Grok and its engine right now. Part of its chain of thought process is actually referencing what Elon Musk thinks on the Israel-Palestine-Gaza conflict when it's formulating its stuff. So, you know, Twitter is a really interesting business, right? Because like if that's the type of content that's going to be proliferating on the platform, obviously it's a dead end for advertisers. But Twitter then just becomes the data pool from which XAI trains its models on. Which again, I mean, if you looked at the model this week, you might say that's a faulty data set, right? Like you're not going to train your AI on 4chan, I hope.
I mean, what did they train Grok on then? Because it sure sounds like that's exactly what they did. Okay, that and Daily Stormer.
Okay. All right. So I would point out the website that we referenced previously. They are an independent group that indexes and benchmarks these AIs over time. And this is why this is actually an important story here. Their independent analysis of Grok 4 puts Grok at the top of the pack in terms of AI modeling right now.
Shocking.
So Thomas, when you think about, you know, your Tesla trade here, Tesla doesn't have Grok itself, but it does use rudimentary AI, obviously, for self-piloting. This is something that's really, Grok is something that can help Tesla despite this week's malfeasance, I suppose. But this is a good-looking chart. The chart's looking better and better. It's a series of higher lows, right? We're beginning to funnel into something that's looking a little bit more like a triangle here off the lows. It's a compelling chart setup. I can't shake that. Above 350, guys, I think then this stock all of a sudden becomes a very different conversation for being directional. And likewise, if you're below 275, 260 again, you have to think this thing's in a lot of trouble. So there's a lot of optionality right now in terms of how this plays out, but we could be getting ready for the breakout sometime soon. Ilya, if Tesla isn't the company that we're paying attention to, I'm still trying to wrap my head around why no one except for Jim Cramer is talking about NVIDIA right now. Granted, this is probably Jim Cramer's best pick. Going back to his first mention, as it's been talked about in the media today, NVIDIA's up 42,000% since he first recommended buying it.
Yeah.
That papers over a lot of the other Jim Cramerisms over the years. But this stock, all-time highs. Yeah. Why aren't we talking about AI the way that we were back in January or February?
I think this speaks to the kind of conversation that we have been having about wars in the Middle East or tariffs from the White House. We've just had half a year where we were barraged with everything you could possibly imagine. It seems like a lot of it is in the sauce now. And as you know, I mean, my whole perspective on all of this, as we've been looking at sort of the normalization of NVIDIA's earnings surprises over time, where they were surprising in the double digits and then the low single digits and now the very low single digits. The market is benchmarked to kind of a level of status quo. And there comes a time in the adoption of any new revolutionary technology. We saw this with railroads. We saw this with the transformation of the American colonies into a nation. We saw this with telecoms, famously, of course, in the dot-com crash. The technology appears, there's a hype cycle about its possibilities as you're sort of in the picks and shovels phase. You start building things and people start to mentally extrapolate what it could mean, well ahead of when anything actually exists to justify those kinds of valuations. And when you get to sort of peak wishful thinking, and everybody that's had the wishful thinking to go long has, for the most part, there's a washout. It happened with railroads again, it happened with telecoms, on and on and on and on and on. We're getting, let's say, closer to that kind of a thing for AI as opposed to the alternative. You can't just extrapolate endless capacity forever, is what history teaches us. You at some point need to have the point where hype meets reality. There is a valuations reset, and then the great and promising future actually builds out. I mean, certainly the dot-com crash didn't say anything about what the internet would ultimately mean and how revolutionary it was. The collapse of the railroads stocks didn't tell us anything about what railroads would ultimately mean for turning America into an industrial superpower, et cetera, et cetera, et cetera. It just feels like we've gotten to a place where that which we need to know about AI and sort of the pie in the sky version of the future, we know those things. And the market is going to get less and less sensitive to things that it knows, that it's benchmarked. The real question now is either can you go from strength to strength because you find something new in this story, or is this kind of acquiescence to the obvious tell you that you're running out of steam and some kind of a reset in valuations is on the horizon?
Thomas, you haven't had trouble trading the semiconductors higher here in recent weeks. Is this something that's still going to keep going up in your view? It's a 9.7 IVR, so low volume, low volatility. Why not run to 300?
Yeah, I think so. I mean, there's no reason to derail this rally right now. The semiconductors have been pretty resistant to the broader rotation we've seen in the stock market. So there's some enthusiasm that's more baked in here than it is elsewhere in the market. And like Ilya said, you hit a saturation point, but there's still, you see investment headlines every week, if not more, into data centers and collaborations with energy providers to fuel these data centers. And although some short-term projections have leveled off for some of the more enthusiastic targets for investment, the long-range forecast for getting all these chips is still pretty high. And even Bloomberg had a story. China is building a bunch of these data centers that they should not have enough chips for. So they're building data centers that, they can't get the chips for because they can't get the H100s, the H200s, or the newer models from NVIDIA. So, they can't produce them themselves. So why are they building these data centers? But you're seeing the same thing happen in the U.S. There's still plans for massive data center expansions, plans for how to power these data centers. I think the enthusiasm is going to persist through anything except more than a mild recession. So I like the chips here a lot. Yeah,
I agree with that.
And the China story, it's not necessarily bullish for chips alone, because China has embarked on a lot of enthusiastic projects before that ultimately end up going nowhere, and it's more of a case of regional or provincial leadership trying to impress the central government, and then they end up not being able to follow through. But maybe there's something there. Maybe they're expecting some kind of easement in these chip restrictions eventually.
I mean, obviously, the story of China for the past few decades has been of wanton overbuild only for the sake of putting people in jobs. The history there is not lost on anyone. When a Chinese emperor is incapable of providing jobs and sustenance, the Middle Kingdom comes apart. We've seen this happen time and time again. And so if you look at the current kind of environment in China as essentially just not dissimilar, by the way, from what's going on in Russia. I mean, in Russia, you've historically had a czar, then you had a commissar, and now you have a corporatist czar, but a czar is a czar. And what you have in China is basically a red emperorship, as it were. And they understand, I think, very clearly what they need to do and how politics in the country works. Now and for all time, it would seem. So for decades, they've been building ghost cities and industrial capacity for which there is no demand, and EVs that they're now going to dump on any market that hasn't already passed some sort of barriers to prevent the dumping, because there are no Chinese consumers to buy these EVs. Any number of things. I mean, this just goes. The chips thing is just another thing that they've overbuilt. So sure, they'll keep going until the house of cards caves in eventually. They haven't had growth in 2 years, really. So they're pulling out all the stops to kind of stay afloat. We have second quarter GDP numbers out of China next week, and chances are for 9 consecutive quarters after the inflation numbers we saw this week, we're going to get a situation where nominal GDP is going to be lower than real GDP, which tells you that for 9 consecutive quarters, so far 8, China has been in economy-wide deflation. That is the definition of overbuild. When demand outpaces supply, people compete on price. The price goes up. There's inflation. When demand is inadequate to absorb the supply, prices fall. All of China's economy is essentially in the discount bin for 8 consecutive quarters, probably 9 when we get next week's data. It's overbuild textbook.
And it's hard to stimulate your way out of it when the demand side isn't there as well.
That's right. Lord knows they're trying. They've thrown every which version of monetary and other forms of easing at this thing, but for creating government demand, as, for example, the West did during COVID, and forcing it through the economy. And what do we see? People have even started to take out loans. They're just not spending the money. the spread between time deposits and demand deposits in China is the biggest it has been on record for as long as we have data. So yeah, lending is perking up. For the past 2 months, we finally saw, looking at the Bloomberg Credit Impulse Index, that in China, you've had a positive increase in the share of new loans in GDP. Finally. But is anybody spending the money? No. There is no demand.
Ilya, yesterday we got the news that Trump's putting 50% tariffs on Brazil for political reasons, which I suppose is kind of like putting sanctions on a country, right? America sanctions countries when we don't like their internal politics, but this seems to be done through we have a trade surplus with Brazil, so slapping a tariff on them makes little sense. Brazilian stocks down 1.53%. This has been a place that you've been bullish this year, and granted, Brazilian stocks have done well so far, but hasn't been a good turnaround this far in July. Do you still have a proclivity for overseas equities relative to their U.S. counterparts?
Certainly in Brazil, largely because I think what we're doing in Brazil and what is happening in Brazil is it's pulling closer and closer to China. Now, Lula, in his political comeback, Brazil's leader, he's pretty unpopular this time around. And what the president is doing is largely aimed at what he believes is an unfair attack on Brazil's former right-wing leader, Jair Bolsonaro. But all of that is kind of noise. What's actually occurring here is Brazil, from a policy perspective, under Lula, is pulling closer and closer to China and offering them up, for example, beef, which China tends to import up from either Australia or the US, and saying, hey, we have all the beef you need. We have all the soy you need. So if the world is going multipolar and if it's splintering, then for all its protests of being neutral, Brazil is very clearly in the Russia, China, Iran camp based on how it's behaving. Now, maybe what this means, given how unpopular Lula has become, is that you're going to have a backlash. They have elections coming up next year. You have a backlash, some sort of a Malay type character swoops in, like Javier Milei in Argentina, right next door. And you have that kind of a hard change in Brazil. That's good for Brazilian stocks. Or you don't. And instead, Brazil emerges as a key backstop for China for all of these things. Well, that's not bad for Brazilian stocks either. Might be worse for Brazil, the country, but certainly not bad for Brazilian suppliers of all these things. And so if you look at a chart of EWZ over a longer term, what you see is that it's breaking out. In fact, it has broken out of a very long-term decline. If you go to monthly chart or a weekly chart, you can see that this year has marked a very clear departure from a long-term decline, because I think the market has recognized that you're looking at something where, at the very least, equity valuations in Brazil probably have some kind of upside. So with that in mind, I'm still long. I think we've had a nice little pull back to retest former resistance as support, and I actually bought a little bit more.
Thomas, Brazil's gain is soybeans, and you're a resident soft ag guy around here. We spoke a few days ago about what was happening with corn and with wheat. Is there anything interesting on the board here? I know it's not the typical topic we talk about, but when volatility is this low, you have to go sniff it out. And the IVRs in corn, soybean, wheat, they're sizable enough. Do you got anything doing in this much maligned, unloved sector?
Yeah, so I mean, Brazil actually has been exporting a lot of soybeans to China, right? Brazil displaced the U.S. as the largest exporter of soybeans to China. China's still importing a lot of soybeans from China, but now corn, Brazil's also looking at a 10% increase in their corn crop from last year, and they're harvesting soon. They're competing with U.S. corn. So U.S. corn exports have actually strengthened over the past few weeks, and we're above the USDA's yearly projection to the tune of around, we're 3% over it. So there's a lot of corn on this global market. That's driven prices really low. We're trading right under 400. When we went under 400 in corn, I bought a micro corn contract to the long side. I think this is, a lot of the supply, the oversupply is now priced in, and we're going to look for a bounce soon. Of course, this is a very speculative trade if you're trying to get long corn here after, an extended downtrend, somewhat of a risky trade. But I think, the upside, if we do get, through this harvest and you see that the competition for U.S. corn stays elevated, which exports are showing right now, I think we could clear some of this old corn crop in the U.S. and, make way for this new crop to have higher prices. So yeah, I'm long corn. There's good volatility in the product compared to especially a couple months ago. So, the volatility is there if you want to take defined risk trades on it.
The one thing I'm looking at in wheat here today, just for something I'm going to chew on for tomorrow, we did set a new low in wheat relative to yesterday, but we closed above yesterday's high. That's a bullish engulfing bar. We did close above the 1 week, the 1 month, and the 50-day moving average. So potential bottom here. In any event, we're out of time for overtime here for this Thursday, July 10th. We'll be back on Monday, as we are every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Thomas Westwater in Chicago, I've been Chris Vecchio in New York. Good luck trading. After a brief break, more Tasty Live. Ilya's here with Macro Money. See you there.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, Tom.
All right, Glenn.
All righty, Julia. What's one stock or trade strategy that everybody's really hyped on right now that you think is all smoke and mirrors?
I feel like the hype is changing a lot. Like it was quantum stocks. Tesla's obviously like in and out of being hype. The dollar now is like a big hype trade. I think quantum stocks are going to come back, right? Like I think that the AI hype's not over yet. So any like AI heavy stocks, any like, Microsoft, IBM in there a little bit. Yeah, I feel like the AI hype's still going.
Well, I mean, if it's trading there, it's probably not smoke and mirrors, but I do think that there are certain sectors that have blown up to kind of like somewhat ridiculous levels. I think that some of the digital asset, the crypto stocks, are trading at a huge premium to the price of spot crypto.
I think following the taco trade, the Trump always chickens out, that's a dangerous one because even if it's played out 9 times out of 10, those have been the biggest movers. So if he doesn't chicken out, I'd watch out.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
So I studied economics and international relations, and I wanted to do the hands-on rather than the academic version of that, and the most natural thing was global macro investing. I begin with a sense of where I think the overall direction is for the macro theme for the next 6 to 12 months, and then look at some basic response from the price action to see how it's going. I think the price itself is the purest of indicator. It subsumes within it the collective emotions of the market. One of my favorite mottos, if you will, comes from the always great Ira Harris, who said, if you're right at the wrong time, you're wrong. And so, for me, every macro narrative begins with what's the price action saying, rather than this or that economic indicator or some such thing.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's another quiet day on what has been a quiet week for financial markets. Not a whole lot on the economic calendar this week, so not surprising that we're idling across the major assets. But we'll take this as an opportunity. It is, of course, the beginning of the second half of the year. So what we'll do is we'll take stock of what happened in the first and go asset by asset of the majors and see, never mind what the data says, never mind what the headlines say, what does the price action say about what macro narrative and what macro story we need to be telling ourselves as we get into the second half of the year. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we'll start by taking stock of what has actually occurred. We'll look at just hard performance, no economic indicators on our show today, just looking at the price action. And what we'll do then is we'll look at where all of these moves leave each one of these major assets, and we'll see how it goes for the setups that present themselves for the rest of 2025. So let's start here with this, and I'm looking at it as kind of a scoreboard. In the first column here, we have the second half of the year to date, so call it first half of July so far, essentially. The next column here is what we did in the first 6 months of the year. And for reference, there's a 25-year average. Now, one thing to keep in mind here is that, of course, Bitcoin doesn't have a 25-year average. It hasn't been around that long. And so what we have here instead, looking at that, is a 7-year average. I tried to single it out as far as color coding here to make sure that we're not looking for this as apples to apples comparisons to, let's say, the S&P or the dollar, because, of course, this is not an asset that's had that kind of a track record. And so we wouldn't be saying exactly the same thing about it when we compare its recent performance to a kind of historical norm. So let's go down the list here. What did we see in the first half of this year? S&P 500 was up 5.4%. Now, for all the fire and fury of wars in the Middle East and the rollout of the tariffs and the apparent sell America kerfuffle where stocks, bonds, and the dollar were falling in tandem toward the beginning of April, end of the first quarter, going into the second. For all that, the S&P 500 has only gone up a touch more than an average 6-month period over the past 25 years. 3.7% is the average. 5.4 is the gain that we have. Solid, but nothing off the charts. NASDAQ is a similar story, 7.9% gain for it. 5% is the norm, so not exactly soggy, but also not crazy or standout. Certainly good, but not amazingly shocking. No, to go for amazingly shocking, you'd have to look at yields, gold, or the dollar. And of course, there's a special spot here for crude oil, which we'll get to in just a second. In particular, the most interesting thing on the yields front is just how volatile the long-term interest rate structure in the U.S. has been relative to history. The 10-year yield down 7.5% here in the first 6 months of the year, and the normal run is 3.7. So this is almost double the usual move. And interestingly, for all the screaming about sell America and Everybody is fleeing our markets and nobody wants to own dollar-denominated assets. They certainly seem to be willing buyers of U.S. bonds because, of course, when yields fall, what that means is that bonds are being bought. Bonds are up in the first 6 months of the year. Now, again, it's not anything crazy, but there it is. The swing at the front end, where the sensitivity is less to, let us say, longer-term fiscal viability concerns and more so to near-term monetary policy concerns, the story is about easing. And despite the Fed's resistance, we have about a standard size move, 12.1% decline in the 2-year rate so far this year. The average is a 13.1% swing, and it's to the upside. So this is certainly a move out of step with the norm, both in terms of direction and perhaps a little bit in terms of magnitude, but not much there. Certainly that for the 10-year, though. It is almost double the average move and in the wrong direction relative to the average. So there's a clear story in the bonds here suggesting we're not positioning for higher rates or for some sort of sovereign collapse. The Treasury market is being bought, and the markets are betting on Fed rate cuts. We'll put a pin in crude oil for just a second because that is possibly one of the more magical of these numbers, given what the news would have us thinking. But what is certainly a part of a sell America type of narrative is the U.S. dollar. The major alternatives to the U.S. dollar seeing blistering gains in the first 6 months of the year. Gold up 25%. That's huge relative to the average. Euro up almost 14%. Again, huge relative to the average. Yen up 9.1%. On average, the yen barely moves at all. So we have a very clear sell dollars narrative here. Now, Bitcoin is up 15%. Again, asterisk, this is only a 7-year average. A 6-month run for Bitcoin that is normal is 42% over that average. Obviously, it's a very young asset, and this includes periods of immense volatility as a function just of illiquidity alone. Obviously, that liquidity issue has been diminishing with time. Bitcoin has become more and more liquid with the introduction first of futures, then of ETFs. So there's been a significant maturation in these markets. Nevertheless, a drop from 42 to 15 is a significant decline. I just wouldn't necessarily say that you can chalk this up easily to Bitcoin looking soggy, and instead look at this as some combination of momentum cooling and of the asset just becoming more liquid and more mature. And so its up and down swings have, thanks to there being more buyers and more sellers at every level, they've just calmed down some. But there is a story in these numbers, Bitcoin aside. If we take a look at, and before we get into it, we'll look at crude oil here as a last bit. But if you look across all of these assets, one by one, there is a narrative to be extracted. And it isn't the narrative that you might expect if headline reading is your pastime. So, and we save crude oil for last because it really makes this disparity very, very clear cut. We have had all the reasons in the world for crude oil to be surging if you were to read the headlines. The situation in the Middle East has only become more acrimonious. We had Israel strike Iran directly. We had the U.S. join them in striking Iran directly. The situation in Gaza seems no closer to any kind of unwind. And the situation in Russia and Ukraine isn't getting any closer to a resolution either, it would seem. In fact, just this week, the president was bemoaning what Russia is doing, and ostensibly his attempts at peacemaking have been rebuffed. Supposedly he had a good relationship with the Russian president and thought he could be a vector for some kind of a settlement. Well, that's not occurring. So all of the disruptions that you might have expected to be so worrying for crude deliveries, they give us a net out to a 9.2% decline, which is obviously way off what the historical average of a 5.6% gain is. And that really is a kind of avatar for how one might read this data more generally and say, well, if we ignore the headlines and see what capital is actually signaling with where it's going, what do we need to think about? What do we need to worry about? What is the macro story really if we listen to the price action? Well, crude oil is down when the headlines might think it's up. At the same time, the dollar is down and yields are down across the curve. Okay, if yields are down and the dollar is down, that seems to suggest that the dollar is expected, or the markets are positioning for the dollar to be less attractive as a thing to hold. Okay, that is sort of Forex markets 101. When a currency loses yield advantage, it becomes less attractive relative to other currencies. But is this a kind of sell America, everything in the U.S. should be sold that's not nailed down kind of a move? Well, clearly not, because 10-year bonds are being bought. That is to say, the markets are signaling confidence in the U.S. as a long-term borrower, Moody's downgrade, belated though it was, notwithstanding. We're also seeing that at the front end of the curve, as we were just saying, rate cuts are on the menu. And in that context, crude oil being down comes together to say, well, if yields are going to come down, but not for catastrophic reasons, why would they be going down? And why would a cyclical asset like crude oil be going down with them? Why would anti-fiat alternatives that tend to thrive in low interest rate environments like gold be outperforming? Why is the euro and yen looking so strong when their interest rates are lower than that of the U.S.? Well, all of this seems not to paint a sell America story, but a recessionary one. There's some kind of economic downturn in the works. But stocks are up, you might say. Sure, but in dollar terms, they're not, because the dollar is down more. The dollar is down more than stocks are up. So if you were an investor in U.S. equities, sure, if you are a U.S. investor, then the dollar is your currency in which you operate, and you don't see the exchange rate difference. But if you're a foreign investor, let's say, in U.S. markets, you're actually down money because stocks have gone up less, let's say for the S&P, 5.4%, then the dollar has fallen 13.9%. So if you made 5.4% on your US dollar denominated stocks, you're actually out money on the exchange rate. So is this exuberant risk appetite? Doesn't look like it. In an environment where the net is for the dollar to fall a little on an average quarter, and for stocks to go up 3.7% on an average, or not quarter, 6-month range, and for stocks to go up almost 4% on the same scale, well, yeah, that makes sense. That makes U.S. markets attractive. This is not that story. Now let's take a look then where all of this leaves us. If the markets are positioning for some sort of economic downturn, where are we across the major assets as we head into the second half of the year? Here's the S&P 500. Despite kind of low percent change values, it is at a record high, nominally, of course, because the way you get those narrow percent changes is you get this wild wick on April's candle. But also what you clearly see is negative divergence in momentum studies. And this is the relative strength index, which is just a basic oscillator here. And what you see is that although you're setting higher highs on the price, you are not setting it on this oscillator, which in pure arithmetic terms, not technical analysis, voodoo, not anything like that, just pure arithmetic. The way that RSI is constructed is it's a ratio of average closes up versus average closes down. So all it's really telling you is whether the price has a propensity to close up relative to down. And you can see that in a normal situation, as the price rallies, it also has the momentum behind it, as it were, to have the propensity to then keep closing up relative to down. So as the price goes up, RSI goes up. Until it doesn't. You can see these divergences, for example, in 2022, where this precedes a loss of momentum that leads into a top. It's a similar story in 2007. It's a similar story in 2000. And so we've seen this movie before. When it happens on a monthly chart, this kind of a loss of momentum can be toppy. We haven't seen it confirmed yet, certainly, but does look like we're getting into some rarefied air as momentum is drifting out of the market. Same story in the NASDAQ. Again, record highs, but we're not matching it, again, in just pure arithmetic terms in momentum studies. So again, looks like despite what the price action is doing, this market looks like it's feeling toppy and losing steam. After all, this also in 2022 was a record high. But because we set it with momentum fading, only a matter of time before it turned into a year-long sell-off. The situation in bonds is a little bit more nuanced because, of course, we just saw that yields have been going down. And indeed, you can see that here. But the move so far has been relatively modest. And in fact, things have been broadly range-bound after the rate hike cycle that ended at the end of 2022. So as the Fed has idled, so too have yields to a large extent. But certainly there is no sell America panic here. And indeed, since the beginning of the year, yields have come in. This is the 10-year yield future, not the bond. And you can see we're a little bit lower. Not catastrophically so, but what that tells us is, of course, that if the Fed really does start to cut rates, then we have all kinds of room to go. But all of what the headlines would tell us is a reason why bonds should be collapsing and yields should be soaring because confidence in American credit has been lost. None of that is on this chart. It is the same thing with the 2-year yield. Here you can see actually the dovish implications of what the markets think of the Fed are a little bit more obvious. Not surprising. This is more sensitive to immediate Fed policy. And you can see yields are in from the beginning of the year, but they've actually been coming in since the beginning of 2024. And indeed, we got some rate cuts last year to show for it. 100 basis points of them, as a matter of fact. And so we've had a level change in yields. People are buying these bonds. They're expecting easing. The Fed only sees 25 basis points in rate cuts next year. The markets see closer to 70. Again, this is smelling of some sort of an economic downshift that the markets are envisioning, that the Fed is going to have to respond to. Crude oil, for all of the fire and fury on the geopolitical front, has been steadily declining since 2022. So far this year, the net effect of what we've seen is just more downside. Now, we've kind of anchored near what is essentially the former support in this range here, and these long wicks on the monthly chart suggest we tried rallying through them and failed, which again tells you if there's kind of a geopolitical concern here, we'd be seeing something else. In fact, this long wick is a picture of that geopolitical concern failing to be a longer run motivator of price action. So what do we see instead? Well, this is a cyclical asset. If it is sensitive to supply and demand for energy, which is what you might expect, then what this is telling you is that's the thing that matters, because otherwise it'd be rallying, which is yet another little bit in your get ready for recession argument. Gold seems to have the most of its run up at the start of the year and is now idling, but very tellingly is holding its ground, whether the geopolitics improves or doesn't. Obviously, crude oil here has been a story where the geopolitics are being shrugged off. So that gold is holding up here, very clearly not a story about that. If it were, it'd be falling. But it is holding up. What's holding it up here? Falling yields and a falling US dollar could certainly do it. And so again, we get to a place of expectation of a downturn. If surging stocks were a story of reflation and buoyant growth, it might be going higher. But that's not what we're seeing either. This looks more like the standstill that you've seen in bonds in the most recent months, and the upshift leading into it to expectations of a more dovish stance. And of course, this is the US dollar, the dollar index here as a catch-all. We've very clearly shifted out of the range that was there after the rate hike cycle in 2022 that gave the dollar a massive yield advantage, and so it was rallying. We've clearly shifted into a lower setting here. We've broken out, giving us more room to keep going down, it would seem, in general terms. No sign yet of a turn, though certainly if there were a tactical bounce here to retest the underside of this range, that wouldn't be anything shocking. We've seen a pause here. When we initially took out this range, there was an attempted rally that ultimately stalled. Now we've got another leg lower. Maybe we could see another retest and failure here, but the direction seems unmistakable. And in the context of what we're seeing in the yields and them going down and bonds being bought, it isn't a loss of confidence in the dollar as such, but just a bet on relative rates. And of course, here's Bitcoin. And like stocks, we're setting higher highs, but momentum is fading. So if you were going to get some sort of a washout and stocks were telling you that, this seems to be telling you a very similar thing. and pointing you into a risk-off concern type of a direction. Now, these are, of course, monthly charts, and the performance we've looked at is 6 months of performance, so actionable this may not be, but it is a useful exercise because it suggests through prices what macro narrative is likely to prevail, at least at this point, going into the second half of the year. It's not necessarily what the news might suggest or even what the data might be whispering at us. And that perhaps makes it the most likely to play out because the markets haven't priced this in to nearly the extent that perhaps they could. That is Macro Money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise here Mondays and Fridays, including tomorrow, for Futures Power Hour with Chris. Tuesdays for The Price of Truth with Victor Jones. Sunday for First Call with Tom and Victor, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable,
Just amazing. Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts. Some people say it's insane. That's what I do.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome back to another always wonderful installment of Risk and Reward. We have an unfamiliar face here with me today. Errol is moving up to our wonderful Chicago land, and so I am joined by Thomas. You may have seen Thomas on Trades from the Research Team a few of these mornings the past couple weeks. Thomas, how we doing? What's going on?
Gus, I'm doing fantastic. It's so nice, the change of pace from the research segment where I got to be overly professional, talking to Tom and Tony. I got to be careful with my words here. Now I feel like I can unbutton. I have no buttons on my shirt, but I would unbutton another button, chill out, and just hang out with the audience and talk to you.
Hell yeah, love to hear it. Yeah, we like to keep things light here. It's it's nice. We can just we can riff on this a little bit. Thomas Zaborenko, how did you discover Tasty? Tell us a little bit about yourself. Let the viewers get to know you a little bit.
Sure. You know what? I discovered Tasty. I was a Thinkorswim user for a while, and then I wanted to trade options, but I was 18, and so the only place that would allow me to trade options was Tasty Trade, and so that's how I discovered the platform. And then when I realized that the creators of Thinkorswim were also the creators of Tasty Trade, it made me grow a relationship with Tasty itself and the creators like Tom. And I was watching their shows since I was 17, but started trading on their platform when I was 18. And so to be here now after a few years of watching is super cool. Very full circle moment. And once again, I'm just glad to be here in front of the Tasty audience.
Yeah, absolutely. Thomas and I have very similar arcs with how we found this company and how we our course of getting here. It's funny. What got you into, I suppose, entrepreneurship in the first place, or hustling? What made you? What led you to trading?
The hustler grind set starts with a $9 salary per hour at Ace Hardware. That's where I first worked when I was 15, because my parents are immigrants, and so I was told to be working. I was working since I was 13 years old as a house league umpire, and so with these small hourly salaries, I just wanted to make more money. It was just obvious. $9 an hour was not cutting it. I wanted more snacks, more sunflower seeds, the Taco Bell Supreme, of course.
Taco Bell Supreme.
Yeah. And so
you guys haven't tried Big's Taco Supreme sunflower seeds? Go out there and get you a bag. Thank me later.
That's right. Right. Those are good.
Go on. I'm sorry.
Yeah, but trading, I just say, like, my style of trading really is very directional. I love risk, actually. I propose, obviously, great trades with a lot of research and quantitative background to it. But in my free time, I do have several smaller accounts that I just go ballistic and, just long calls, long puts. Oh, yeah? That's just my style of trading.
Yeah, that's just risk and reward here, baby. That's what we're here to do. You guys are making me laugh and chat. I can only see hair. It is a lot of hair. It's certainly more hair than when we have Errol in here. We both got the mop going on. I like it. Anyway, we have some lovely content for you guys today. We are going to go all sorts of off the walls here shortly. We're going to talk childhood illiteracy, Chinese content farms. We're covering the topics that the people really want to hear about. Clearly, so yeah, we can go ahead and jump into these slides. Beautiful. Gen Z dystopia. That's the world that we're living in right now. Chinese TikTok farms, rising illiteracy rates. Technology is making its mark on the next generation, and it's a bad mark. I'm not gonna lie to you. So we can dive straight in here. So, Thomas, tell me about how this idea came to be. You came to me yesterday and said, "Have you ever seen these Chinese TikTok farms?"
That is exactly right. My desk is like 3 desks to the left of Gus and Nikki and right next to Mike as well. And so I always kind of just like scoop my chair over there every few hours and just come to you guys with garbage. I'm joking, but I come to you guys with amazing information.
He's not joking.
I got this YouTube video and it was on just how the Chinese influencers, it's just growing and growing. There's so many of them. There's like 15 million streamers that they're on the streets lined up in like the same style an office would be set up, dystopian as hell. And they're just filming TikToks. I'm not filming TikToks. They're live streaming on their platforms in China. And they use a ring light and a their phones right in the middle of the ring light. It is the same. It is copy paste all over the street. I thought that was so crazy. I just had to let the boys know because I'm Ferda. right, I'm Ferda.
All right, we made it 5 minutes before Ferda got worked into this somehow. Yes, but yeah, exactly. And that led us to a conversation about the way that children really want to be streamers these days. The number of streamers is ever growing because there's a few very prominent ones who have managed to make very affluent and successful careers out of streaming that act as motivation for all the others. And streaming is sort of a bubble. This led us into a conversation about literacy rates and what this could mean for children, how streaming has exploded since COVID. We're going to cover all these things today. So yeah, we can go first slide. So yeah. Social media, obviously rapidly growing since the early 2010s. I believe I opened my first social media account in, it's fourth grade. So that's, I think, 2011 for me, something like that. I got on Instagram for the first time. But COVID lockdowns in 2020 accelerated the growth of social media itself, as well as the amount of time and visits that people were giving to social media. This chart we have on the slide here is social media visits from 2019 to 2023. You can see that 2020 is obviously an inflection point in this graph. Projections indicate that 6 billion people are going to be using social media by 2030, just 5 years from now. Numbers are currently at just under 5 billion users worldwide. And currently, 75% of social media users are younger than 45. But obviously, this is going to shift. People aren't just going to turn 45 and say, "Guess I'm done with social media," and delete all their accounts. This is a trend that we do expect to continue through time. How old were you when you opened your first social media account?
You know what? Fourth grade sounds about right. I remember my first phone was the iPhone 5C. It was blue. I remember that vividly.
Those were fire.
Yeah.
The 5Cs, oh yeah. That was
so
cool.
I remember Instagram had like this brown logo on it with the camera, and I had Snapchat. So yeah, fourth grade sounds about right. I opened up my first Twitch account probably a little bit before COVID. So like 2018, 2019. Yeah. Streaming Valorant, CSGO. Yeah, it was a fun time.
All right, well, awesome. Yeah, we can go next slide here. Let's So live streaming, as Thomas just beautifully led us into, has also exploded since 2020. But what's different about live streaming compared to social media is that this was not some steady growth since 2010 that just suddenly exploded in 2020. You can see that the growth was steady, but 2020, these numbers just about double. All of a sudden, everybody and their mom is streaming on Twitch. And so the number of viewers also exploded around that time. Everybody had a lot of time on their hands with COVID, but at a disproportionate rate. And the ratio of live viewers to live streamers has fallen from 33.6 to 22.8 in the last 10 years. This graph that we have on the bottom of this chart, the line graph, the blue line represents the number of Twitch channels. The green line represents the number of Twitch viewers, and this gray line in the back represents the ratio between those two things. And as you can see, that has sharply fallen pretty much since the inception of the platform. Yeah, what are your thoughts on this? You had aspirations to be a streamer sometime. What drew you to that? You were kind of ahead of the curve too. You're in our lower number section.
Yeah, definitely. I feel like a lot of parents. Here's the thing: why is streaming in the first place blowing up in China? Well, it's because you're seeing people like Kai Cenat, especially recently, getting on Time Magazine. They're making a lot of money. Streaming is clearly a successful career, and you could really make a lot of money with streaming. And so that's what really got me into streaming as well. I mean, but I'm young, right? I was raised off my phone. I was watching YouTube since I was probably in second, third grade, right? So naturally, I wanted to be a YouTuber all my time. So being here and being able to do a show, it kind of fulfills that dream, right? But something that's really interesting about this graph that I really like is that after COVID, you can notice that the viewers and the streamers, they kind of retain to the platform, right? It's unlike other streaming platforms where you saw a big rise, a sharp rise.
Yes, and unlike other COVID trends like Peloton as well, where everybody buys in and then it goes away as soon as COVID ends. Yes.
Yeah, exactly. And you can see clearly just how sticky Twitch is as a platform. Viewers are staying on. People like the experience, right? There is no alternative that's much better, right? Like, I know YouTube created streaming as well, but you can notice that these streaming numbers and viewer numbers haven't really gone down significantly. So clearly Twitch is a great platform, not only for creators, but for the viewers themselves.
Yeah, absolutely. And yeah, it's very interesting, the grip that these streamers have come to have on society and culture, and they're real like A-list legit celebrities now. The number of streamers that I can name, Kai Cenat, Duke Dennis, Aiden Ross, iShowSpeed, the list goes on. I don't watch any of those people, nor do I follow them on any social media platform, but they are unavoidable. It is an unavoidable part of culture. As much as I did not want to know about the Kendrick and Drake beef, I do not care what Kai Cenat is doing at the AMP house this weekend, but I hear about it. And so, yeah, it's this really interesting thing where we have slowly been on this arc especially with YouTubers, where they slowly are getting closer and closer to A-list celebrities. But it feels like this is something that has just finally exploded, and we're seeing Kai Cenat and Aiden Ross at, what's the all-white party? No Diddy. What's the all-white party?
That is the one run by
it's the fan
Rubin something.
Yeah, Rubin,
right?
Michael Rubin. Yes.
Yeah, there you go.
Yes, these guys they're at Michael Rubin's all-white party, taking pictures with Lil Baby and Drake and all these famous athletes, real A-list people. So it's been a cultural shift to where these people are respected as legitimate creators now, as opposed to just somebody doing some funny thing on YouTube. As rich as the YouTubers may have been before this explosion. But yeah, we can go next slide here. Yeah, Chinese content farms. Now, if you guys aren't privy to this is really crazy, and you can look up if you search this Chinese content farms keyword on the internet, you can find lots of examples of this. But live streaming has grown to such prominence in China that these content farms have begun to arise. It's a centralized location where streamers can rent spaces, at least the indoor ones. That's nice. That's a primo content farm. But there's also numerous impromptu content farms that have popped up on major streets in China. And I would like to say that this is not an issue that is purely isolated to China. There was certainly all types of videos, especially during COVID, of people, on the streets of New York doing NPC TikTok live streams. But it was nowhere near the caliber that we're seeing in China today. So it seems like this is a bubble, as Thomas alluded to earlier. There's currently over 15 million active live streamers in China, and it doesn't feel like there's going to be enough people to watch all of those streamers. The analogy I gave the other day when we were initially formulating this idea was, if everybody's selling apples, nobody needs to buy apples. And it seems like that's the way that we're moving here. So I put this here just to illustrate the gravity of this situation and how much it really is taking over some people's lives. Yeah, well, what are your thoughts?
Yeah, let me add to this. So this is a key distinction I want people to understand, is that these streaming platforms here in America, like Twitch, right, they share with their creators the ad revenue. And so creators aren't really as incentivized to, I guess, beg for money from their viewers, because they're still getting paid for their viewers just simply being on their app, right? So in China, these platforms, they don't provide ad revenue. They don't split the ad revenue. So these streamers, these creators are reliant only on the viewers. And so pretty much you have these beggars, like they're begging on these streams, which is very different to what we have in America here. Also, the platforms, with more creators, you have less of a pie. Streaming is a zero-sum game. If you have viewers, that means somebody else doesn't.
Precisely. Nobody's watching two streams at once. Nobody's donating to two streams at once. And really, this is sort of just a modern, almost dystopian version of the homeless man playing a bucket turned upside down in the subway, except now you have the ability to reach this bigger audience through streaming. But that's essentially what these people are doing, as you said, is just begging for donations. So it's really quite something. Kyle in chat, dare I say it, read a book. Thomas, would you like to tell the people how you get your news?
Guys, I get my news by watching a Twitch streamer react to the news. Any of you who like Asmongold, that is who I watch for my news streams. I hope that does not bash me. Trust me, when it comes to trading, that is separate. But Asmongold, watching his streams is how me watching somebody else watch the news and watching the chat is how I come up with conclusions.
Yeah, so there you go. You heard it here first-hand account. And this is a 21-year-old man, so you can imagine how people 5 and 6 years younger than him are going about getting their news. Anyway, we can go next slide. Literacy rates. This is where this all starts to get a bit more serious. The rise of social media and streamers and all of this has led to children spending a lot less time reading things and a lot more time watching things. When I was a kid, I read Harry Potter books for fun. Like, I ripped through that whole series, Divergent, you name it. I was reading books. It was something I did. I watched TV too, but books were interesting to me, as they were to a lot of children, and that seems to be going away. All these streamers, the rise of social media, also all these kids lost a year of education with COVID, a lot of them at a very, very critical turning point in their life in terms of education, has led to declines in literacy rates. 2022 is the last year where we have good data on nationwide literacy rates. But as you can see here on this slide, they nationwide literacy rate for third graders was 7% lower in, I should say, this is illiteracy rates, I guess, but the illiteracy rate of third graders was 7% higher in 2022 than it was in 2019. And 7% in 3 years is really something. Social media has only continued to grow. All these kids are using ChatGPT to do all their assignments in school now in the last 3 years since then. So it's hard to imagine that this issue has gotten any better.
I can definitely comment. It is not. It is not getting better. Seeing my peers in college, it definitely is not getting better out here. This is crazy that illiteracy rate is going down. It makes sense, right? You're constantly listening stuff, like how people get their information, news, whether it's health news, right? They're all getting it through these audio channels, right? So you're constantly listening to things. So naturally, if I stop practicing golf, I'm gonna start sucking at golf. Same way with reading, right? If I'm getting force-fed content and information through audio channels such as short videos, yeah, I'm going to start to lose my ability to read.
Exactly. And you'll find as well, I think a good analogy for this is a lot of times when people speak a foreign language, they'll say, oh, I can speak it, but I can't read it or write it. And that is a very real phenomenon. You know, if you grow up, say, in an ESL household where you're speaking, say, Spanish to your parents on a day-to-day basis, but you never have to read or write anything in Spanish, suddenly you're an adult and you can speak and understand Spanish very fluently, but you might not know really how to read it or write it at all. I really stumbled there, huh? But you might not know how to read or write. Yeah, right? Look at me, brain rot, guys. I'm falling apart. We're cooked. But yeah, and then the rise of AI chatbots just compiles on top of this. These kids do not need to think or read or write anymore. Teachers are going to have to start shifting to everything handwritten. That's the only way to combat this. And yeah, it's just it's a scary thing. And even if you do that, what's stopping kids from just doing it on ChatGPT and then copying it down by hand? You know, nothing. It's a really hard issue to circumvent. So let's go next slide here. We got. Trying to think of what even comes next. Yes. Now, of course, as all of you are wondering, how does this tie back into the market? Let me tell you. If schools can't keep up, these kids are going to become adults and realize they are illiterate and probably need to turn to these third-party literacy services like Duolingo, Coursera, companies that are publicly traded to fill that void. However, these results have been mixed. Obviously, the illiteracy rates have been rising for some time, and it hasn't really turned into anything tangible in terms of profit for these companies. And Duolingo especially trades like a gamified tech company, as I said here in the slide. But at some point, the actual educational efficacy of the app has to become, you know, what we're looking at and what investors are looking at. So if these apps are able to increase literacy rates for people and they are able to show a causal representation in that regard, that would do great things. But there is also the other side of the world where these kids come out of school and they say, I have ChatGPT for everything. I don't care if I'm literate. And that could work out negatively for these companies. So what are your thoughts there?
My thoughts are this. Duolingo, I currently actually use Duolingo and I'm learning Italian at the moment. Can I speak to you in Italian after a 236-day streak? Absolutely not. So I do think what Duolingo does have, they have a great platform, great UI, great experience. But they do have the ability to be able to take advantage of the fan base they already have, the stickiness of their app, and really make, I guess, better courses. I think they really have this new generation of new possible users that they can really take advantage of and make just a better education app. That's my opinion.
We got Carvana popping up in here. I thought it said Canva initially, which would have made sense, but Carvana popping off in chat here. But yeah, it's an interesting thing. And also, especially in the case of Duolingo, nobody thinks to themselves, man, I can't do English well enough. I need Duolingo, you know? Like, no, that's not happening. I don't know that Duolingo even has the facilities to help you in that regard. So I think that would maybe be a wise move for Duolingo as well, just to offer something broader, educational. Hey, you can't read. let's rectify that situation. But anyway, we can go next slide here, and we will bring things home. So the TLDR here. We're a little off on our formatting. It's okay. Nobody comment about this. It looks fine, damn it. TLDR here is that America is becoming dumber and more chronically online, and childhood literacy rates are dropping rapidly since 2020. So there's essentially two worlds here. You can look at this information and you can say, man, these kids are going to need literacy. I'm going to get long these companies. But there's another angle where you say, man, these kids are never going to be literate. I'm going to get short these companies. Duolingo's going to zero. And both of those are viable opinions. It's up to you to decide which camp you buy into here. But yeah, through a little classic American tweet on here to to really bring this one home. But yeah, what are your thoughts? How do you think this extrapolates out?
How do I think this extrapolates out? I think everybody should try to stream. Is that crazy to say after all this?
That's our takeaway.
That's our takeaway for today. Open up a Twitch channel and start streaming. All right.
Go to a content farm near you.
Yeah. Buy a ring light.
6 foot square and a ring light.
Buy a ring light. Put your phone up and go. By the way, go outside because apparently the retention is better outside, which is hence the reason why all these Chinese influencers are outside when they film these TikToks, because apparently it's true.
Yes.
You're outside.
Yes, there is very good research and statistics that back that up. You retain viewers better when there is stimulus in the background, and the easiest way to get stimulus in the background of your video, if you're just one person, is to go stand on a city street and let things happen behind you.
Absolutely. We should be filming these Tasty Live Live broadcasts just outside.
Yeah, guys, everybody email Tom and say start filming Tasty outside. We could do that. But anyway, yeah, that concludes the presentation for today. It's looking rough out here for these kids. But we'll pop over here real quick and we can do a little tour to market before we go. Here's the portfolio. Fine day for me today. Creeping towards expiration on a lot of my positions, and they're all sitting pretty for the most part, which I'm happy about. I'm happy to be rid of half of the positions on this portfolio. I've been spread a little bit too thin for a little bit too long, and I feel like I'm really starting to push the envelope with this long delta, as much as I do buy into the until proven otherwise theory. But is there anything that caught your eye today? Any trades you put on? Anything?
Yeah. So this morning I presented a Unity software trade. It was a short call at the 36 strike. The reason being, it had you can see, just a very sharp price action recently. And so I don't believe there's really much of a reason besides the overweight signals that big banks have put on for this, for the company, for the underlying. So I went with the 36 strike put because the call, because it just gives you a bunch of space as well to be slightly wrong, right? You can go up a little bit, all the way up to like $34, $35, and you're still making some money, right? So that $36 short call was the one I recommended this morning. It has 96% IV on the contract itself. The company's underlying IVR is at 50%. So this was just a great play. With VIX being so low, this company having a high implied volatility, it was a simple trade.
Absolutely. Yeah, I like it. I don't think I added anything new myself today. I certainly did not. I'll tell you what I'm having a sweat on, though, is this CNC. I outlined this position with Errol on a Tuesday, but I am short a 3250 put on CNC here. Huge fall off, and I joked about this with Errol. I sold this put because it went down. I don't know what this company is. I don't know what they do. I don't know their fundamentals. I know they lost a lawsuit and they tanked 35%, and that seemed a little. Usually people tend to overreact to breaking news like that. So jumped in on the short 3250 put. It closed at 3249 today. And I'm 8 DTE on that, so really hoping we can get some recovery out of that one. Additionally, I sold a 30 for this coming December. I have no concerns about that one at all. But I'm starting to feel a little bit tight on that one. Maybe there's a better TA to be had than because it went down.
I'm wishing you the best. You know what? I do like trading price action, especially recent price action. I do think a lot of the time there's overreactions to things. So yeah, I'm wishing you the best with this trade.
Yeah, I think in the age of 24-hour news and everybody being online all the time and the market trying to, literally instantly price in this information, the efficient market hypothesis didn't hold up as well when you had to wait for a newspaper the next morning, that there tends to be overreactions, and those overreactions compounded as well. Somebody who said, oh man, they lost this lawsuit, it'll go to 40 and then I'll be fine. All of a sudden it's at 37 and they're panic selling, and it only exacerbates that issue. Yeah, it's just, I felt like it was going to be an overreaction. It turns out this might just be the correct price, but we'll see. It's a game of sense that we play. But anyway, that's going to be about all the time that we got for today. You have any closing remarks for the people?
I got one thing to say for the Tasty Nation. Trade small, trade off, dude. See ya.
Good job. Good job. All right. Well, that's going to be all we have for today. Be sure to stay around for more wonderful episodes coming on after this. I will be back here with Errol on Tuesday for Risk and Reward at 4:30 p.m. Central Time, as usual. Thank you so much, everybody, for watching. We love you all. You guys are making me laugh and chat. I haven't been able to acknowledge as much as I would have liked to, but this has been great. Thomas, thanks so much for coming on today.
Thanks, Gus.
Really appreciate you. Everybody at home, you guys take care, and we'll see you next time.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All righty, Julia. All right, Jamal. All right, Tom. What's a recent news reporter earnings story that completely changed your view on a stock, if there is one?
News reporter earnings story that changed my view on a stock. Like, you're assuming that I've watched a news reporter. I don't think I have. I have nobody.
I mean, Facebook, back when it was Facebook, before it was Meta, like that was the first time I saw like a blue chip company dump 25%. That's like your bank account selling off by 25%. That's crazy. And I remember that was back in, I don't remember exactly the date, I think like 2019, maybe 2020 or something like that. And that just like completely changed how I viewed earnings and tech companies, especially on the pure social media side, yeah.
I don't know if I have one that has changed my view on a company, but I do know that more recently I traded Nike earnings. There was very negative sentiment around the company and the stock heading into earnings, and I took the other side.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
All right, Tom. All right, Glenn. All righty, Julia. What's one stock or trade strategy that everybody's really hyped on right now that you think is all smoke and mirrors?
I feel like the hype is changing a lot. Like it was quantum stocks. Tesla's obviously like in and out of being hyped. The dollar now is like a big hype trade. I think quantum stocks are going to come back, right? Like I think that in the AI hype's not over yet. So any like AI heavy stocks, any like, you know, Microsoft, IBM in there a little bit. Yeah, I feel like the AI hype's still going.
Well, I mean, if it's trading there, it's probably not smoke and mirrors, but I do think that there are certain sectors that have blown up to kind of like somewhat ridiculous levels. You know, I think that some of the digital asset, the crypto stocks, are trading at a huge premium to the price of spot crypto.
I think following the taco trade, the Trump always chickens out, that's a dangerous one because even if it's played out 9 times out of 10, those have been the biggest movers. So if he doesn't chicken out, I'd watch out.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy.
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. and we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
All right.
you just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when does yours get delivered? You didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
All right, Katie, what is the Widowmaker?
The Widowmaker can be any spread that is volatile that might dink you if you're on the wrong side of it, but at Tasty Live, the Widowmaker historically has referred to a spread in natural gas futures and the seasonality of injection season and the storage around that. So it's typically a calendar spread that has the propensity to move between the March and April natural gas futures contracts.
What does tendies mean?
Tendies refers to ordering chicken nuggets at a restaurant when you're out watching the game with your boys or your girls, but tendies in the options trading world or the trading world refers to profits that you are taking on a position. What is an offer?
So the offer price is the price at which you can buy an option at, the bid being the price to sell at.
If you missed the live show, here's our cherry on top weekly recap.
My first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
What happens when two titans of trading come together to harness the power of their prowess? Yes, let's watch these two dominate this popper shop. Wait a minute, I thought these guys were traders, not contractors. They're putting up a lot of bricks. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We're live. Yep. Oh, yeah, it's Thursday, July 10th, a little bit after 5 p.m. A little bit after 5 p.m. Central Time, the best time. You know what that means? It's time for Jason Live's GT Show, a little podcast. You're a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. More on that in just a bit. For now, shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. If you don't already have both, go get them. Just make your life a little bit easier. It's just easier with Tasty Trade desktop and mobile applications. Speaking of the people, we should say what's up to the people. Shout out to everybody already in the chat. Let's say what's up. Emmett, how are you? Mark, great to see you. Katan, how are you? Lone, Brian, what is up? Brian Watson, the YouTube goat, how are you? Crying in my popsicle. Okay. No black shirt equals AI Victor. You guys keep doing this. I've seen that a few times. You guys going back and forth about whether it's AI Victor or real Victor. I guess you know you've made it when. What's up, Brian? Showing some skin. Victor's like a philosophical drone. He just loiters overhead. You may or may not know he's there, but his presence is appreciated. A philosophical drone. I'm trying to figure out if that's a good thing or a bad thing. I don't want to be a drone. You know what I mean? I don't want to be a drone. AI Victor. Not AI Victor. It's black shirt. This is not AI. Let's see here. Let's keep going. Good morning, Victor. Yeah, it is morning here. Bitcoin to the moon. It is at 115. That is about as moonish as it gets. Victor was wearing his gray and changed back to his black shirt. I don't know. Did you guys see? When I put on my headphones, somebody said we're live. So you may or may not have seen me change my shirt. I'm not sure. All right, let's keep going. What's going on, everybody? All right, S&P 500, my babies, up about a quarter of a percent, or a little bit less than 20 points. The NASDAQ down about 16 basis points. The Dow Jones up 0.2%. The Russell up about 0.5%. A whole bunch of nothing. You know, I feel like most of you summoned this. You beckoned this. All of you big old scaredy cats that were scared of the S&P 500 moving around a little bit, afraid of a president who was just going to make policy by tweeting. All of you big old scaredy cats, you summoned a 15 VIX. You summoned an S&P 500 that was moving 0.25% each day. You summoned this. And I hate all of you, you know. I don't hate you. I love you. But part of me hates you. Part of me hates that you were scared in April. Part of me hates that you were just like, you know, you did a deal with the devil. Just please stop moving. Just let the S&P 500 rest for a while, and I'll be good. That's what you said. You made a deal with the devil. And here we are, moving 0.25 basis point in the 15 handle in the VIX, and it's all your fault because you couldn't handle it. You couldn't handle a little volatility, a little uncertainty. You couldn't handle a little uncertainty, and then you asked for this, and now here we are. ZB, the bonds, the long end of the curve at 114. We basically retraced about, last week's move. Last week's move, we went from 114 to 113. On the chart, it looks like we did something. We moved basically 2 points to the downside. And in the last 2 days, we moved about 1.5 points to the upside. We're at 114 and change, my babies. A whole bunch of nothing. So the people, we're a little bit scared of that sell-off in the bond market. You're able to sell the opposite this week. Bond yields. I don't know. Let's show the curve. The nice curve is we've been at like 50 basis points between the 2s and the 10s for forever. So 49 basis points between the 2s and the 10s. A whole bunch of nothing. There is just no movement in the curve. So yields are moving. Yields are moving slightly lower, but the difference between the 2s and the 10s are staying exactly the same. Yeah, man, exactly the same. 49 basis points now. I think yesterday we were 48 basis points. At one point, that number was like 67 basis points. We said we'd get a little bit of flattening into 45 basis points. It did come into 45. If I could be honest, I didn't think we'd stay here. I didn't think we'd plant at 49 basis points and never ever move. What's that? That line, and is it Tommy Boy? Black Sheep, I think it is. Where he talks about playing checkers and you never move your back row. That's basically what the U.S. economy is right now. It's a game of checkers. In the movie Black Sheep, somebody who's never moving your back row. Brian says Victor Smurfs. That'd be awesome. Victor just escaped the Matrix. I didn't. I wish I did. I think about that all the time. I wish I did escape the Matrix. I wish I had the keys and the secrets. I talk to my wife all the time. But I don't. I didn't escape the Matrix. I just found a society with a little bit less crime and a little bit less civil liberties. So, you gotta make it. What does Thomas Sowell say? There are no solutions. There are just trade-offs. That's kind of what I found. I found a trade-off over here. Anyways, the 210s, 49 basis points, not going anywhere for a while. And I don't think there's much of a trade there. Long end of the curve is at 114. Just take a bet, up or down, a couple of points. I'm still betting 117, but to be quite honest, at 114, we could go anywhere. It's a 50-50 market. If we got down to 112, I like the odds of us going higher than lower. If we get to 117, I like the odds that we go lower versus higher. 114 is no man's land. I don't think you have any edge here. But that's where we are. And then in ZT, I guess that's the long end of the curve, and the short end of the curve in ZT, which I keep talking about, just betting the over and the under. When the market gets to about one cut, you kind of bet the under, that it's priced too hawkishly. When the market gets to about 4 cuts in the next year or the next 6 months, you can bet that it's probably a bit too dovish. Right now, you're probably on the dovish side, which means if you were going to take a bet, it probably makes a lot more sense to sell ZTs and bet that the short end of the curve comes up a little bit higher. That said, I don't know that you make that bet yet. I do think we're going to start the cutting cycle in September. I think only a super hot inflation number can keep us from cutting in September. I think that's not out of the cards. It's a live probability. Maybe I put that at about I put it at about 30% probability. But I like the odds that the market is priced here, that we get going in September. I think it'd be crazy for Jerome Powell. I think he is going to go past September, he's going to go past July. He's not going to cut. I would imagine that the Federal Reserve Board, the FOMC, is going to show a little bit of deviation. So some people are going to say we should be cutting now in July. That will signal to the market that they're ready. But they're not going to go in July, unfortunately, for all you doves out there. Let's talk housing, says Mark. I almost don't. It's almost like there's no need. You guys know. D.R. Horton moved to the upside. Lennar moved to the upside. KB Homes, Pulte Homes, it all moved to the upside. And I don't really need to talk about it. I spent a month talking about it, hoping for it, and putting my entire career on the line on that bet. And it moved to the upside, so I'm good. But I do appreciate the opportunity to talk about it, Mark. Yeah, I'm telling you, it's just getting started too. All of you. Here's the thing. It's not a good thing. if I could say that, it's not a good thing. If housing goes dumb to the upside, it's not a good thing. It means the administration has abandoned fiscal responsibility, which they are in the process of doing. It means the Federal Reserve has also abandoned any attempt at fiscal responsibility, which they pretend to, they pretend to be some like dual mandate institution. But the reality is they've long forgot about one aspect of their dual mandate. Yeah, man, you're not gonna like. I don't think you're gonna like what comes next. I don't think you're gonna like what. If you're a homeowner, maybe you will. You have a scarce asset that's going to appreciate. The only problem is, and this is what I thought about. You can't sell to anybody. So your homeowner and your home is going to appreciate in value, and you can't sell to anybody. The only thing you can do is cash in your home equity with a bank. So a lot of people are going to cash in their home equity. A lot of people are going to cash in. They're just going to be leveraging themselves because you can't sell at prevailing prices, but you can take out equity at your existing home price. And I think that's the choice that people are going to choose versus get realistic about their home price. But that's neither here nor there. We'll talk about that a little bit. 115,000. We love HELOCs. Exactly, Katan. 100%. I thought about this about a year ago. I go, okay, if the pool of people who can buy a home shrinks, what happens? Because that's clearly the environment that we're in. I thought unemployment would go up. And I thought like, what happens in a world where unemployment goes up, but we are also borrowing more money? What would happen in that world? I thought, okay, well, you're going to have home prices that oddly appreciate, even though nobody can afford them. So they're going up, but nobody's buying the homes at those appreciating prices, which means the pool of people who can afford a home is shrinking, and the only way you can actually tap into the equity or the value of a home is to basically borrow against that home to increase leverage. And I was like, bro, I don't like that world. I do not like that. I do not like that world at all. And it's wild enough. It's kind of the world we're headed to. Home affordability is getting worse. Less people can afford that home. More people are selling than buying because less people can afford it. However, homes are not really depreciating very quickly yet. And at some point, we're going to have to build more of these things. Bitcoin at 115,600. Congratulations, everybody. We had a new all-time high in Bitcoin, up about 4% or so. And I'm not mad at that at all. I'll carry the sign 68, no cash for homies. Defense Department buying up shares of MP. I saw that. So MP. So here's the thing. In the little 12 days war, if any of you follow our good friend, what's his name? I'm going to blank out on his name. Anyways, if any of you follow our good friend Luke Roman. Thank you. He was talking about during that 12 days war, effectively, like, we can't go to war because we need rare earth magnets, and China threatened and effectively did shut them off to us, and we ran low on some aspects of our artillery, and we need China to supply us with rare earth magnets, and they were not at one point during this war. And we sort of we figured out we needed rare earths desperately. If you were following Luke Roman, that was his point of view. And I don't want to say hilarious, not hilarious. The interesting thing is, after Luke Roman had made this point, it was his takeaway from that 12 days war. The Department of Defense invests $400 million, I think it was, in MP materials. This is one of the only functioning mines in America. And this thing was up like 30 or 40% in pre-market today. Mind you, China controls about 90% of mines. So a couple of things. One, Luke Roman was 100% accurate about our need for rare earth magnets. Number two, the fact that this is the only functioning mine in America should have put us on notice. You know, I kick myself for not looking at this as an opportunity ahead of time. It is what it is. This thing is up 51% today, and closed at 45.23. I'm not so sure it's done. I wouldn't buy it here. I'd like to see it cool off a little bit. But the point is, China owns 90% of this stuff, rare earth processing. 90%. And we found out we are being held so far over the barrel that our Department of Defense, the Pentagon, had to become like a 50% owner in the only rare earth mine in America. Wild. There are no such thing as rare earth magnets. It's Fugazi. Okay, interesting point of view, Catan. Or is that? There's Mark. China must own a percentage of MP. To say, it says, is that what a strategic reserve is for, rather than buying equity in a public company? Luke was on Danny Moses' podcast the other day. It's on YouTube if you're interested. Yes, he was. He was with the guys. Oh man, I am really blanking. On the tape. Thank you very much. Katan says later. All Chinese biotechs were up 500%. Kind of. Adam Green says 90% is misleading. Australia has huge fines but isn't producing or exporting. Government incompetent. SLG says, I told you, Victor, about you. You did, actually. USAR, which is a vertical magnet plate. You did. I remember that. 100% you did. And they're up, what, 10, 12% today? So, nice call. You didn't call the right one, in fairness, SLG. You didn't call the right one, but I do agree with you. You did call that. I remember. Absolutely insane. Absolutely insane move. 51% move to the upside. Oh, I hate myself sometimes. I hate myself for not calling that one. Mm. The dollar continues, sort of. The dollar, a little bit of a reversal over the last week. You know, this has been a one-way trade, short dollar trade, weakening dollar trade. It's been sort of this one-way trade. You've got a little bit of a counter trend move over the last week. And perhaps the interesting thing here is that you have a Bitcoin move to the upside, Bitcoin hitting all-time highs, while the dollar is doing a bit of a counter trend move. So a bit interesting in the short, very, very short term. Though I do think this will ultimately just be a counter trend move for the dollar. I think, as weird as it seems, I think I wouldn't bet on dollar strengthening just yet. I think it continues to weaken. But, I think we're getting close. SLG says, I think USAR is better. What do you mean better? It doesn't matter if you think it's better. If one is up 50% and the other is up 11%, it doesn't matter if you think the other one's better. Catan says, Victor, all we talked about are metals and housing. I think that's all you have to talk about. Like I love the Mag 7 just as much as the next guy. But I think the whole story, what is the S&P 500? It's up 5%. The S&P 500 is up maybe 5% year to date, and the dollar's down. As a basket, it's down like 10, 12%, something like this. So I think there's going to be a lagged effect to the dollar weakness. I don't think we've felt the entirety of the dollar weakening move. Kept my MP, but sold my FCX. Ah. Really? Why? I still think there's upside room in Freeport. This is my move. I love these moves. So when the underlying Freeport makes 70% of its revenue off of copper. And what you have right now is copper making all-time highs. Meanwhile, FCX or Freeport has not made an all-time high. You can make very good reasons as to why that is. But I kind of would just sit on Freeport for another $5 or something like this. I think it will make all-time highs. Desade says, I'm going to sell MP naked calls. Wish me luck. I'm not mad at that in the short term. I'm not mad at that. Yeah, I'm really not. Let's look at the skew here. They don't even have any more upside options. You You can't get any more upside options than the 55s. Huh. I don't know that I'd sell upside calls yet until they give you more strikes. You literally can't get any more upside calls than the 55s. Victor, I'd like to introduce you to a commodity that might be of actionable use to you, coffee. Kyle, I'm telling you, I could use a cup. I could definitely use a cup of coffee. Make metals great again. Oh my gosh. You know what's funny? I don't know how hilarious it is, but I'm fascinated by this like back and forth between Jerome Powell and the White House. It's as if the exact same it's like the exact same playbook that you could have used back in 2016 to 2020. The playbook in 2016 was ultra low vol. After like crazy high vol, we transitioned to ultra low vol, no vol at all. And then the president basically browbeat or jawboned the Federal Reserve Chairman into lowering rates, even though the Federal Reserve Chairman said he wanted to raise rates. And then we had a trade war with China, which ultimately got resolved a year and a half in. It's like they're playing the same thing. Excuse me. They're playing the same thing back to the market. I'm looking at the CNBC article. White House accuses Powell of mismanaging Federal Reserve, citing headquarters renovation. That is wild. If you know, it is kind of wild. They're spending like $1 billion on renovating the Federal Reserve. The Federal Reserve has like 25,000 employees. Did I read that? Did I read that correctly? Somebody grok that for me. I think I read that correctly. The Federal Reserve has 25,000 employees. Somebody correct me if I'm wrong. Because if I'm wrong, I'm off by a magnitude of like 10. But how insane. You know, we're cutting SNAP benefits. We are cutting Medicare and Medicaid. Meanwhile, the Federal Reserve has 25,000 PhDs and is renovating a wing of the Eccles building. Crazy. Absolutely crazy. All right, let's see what you guys have to say real quick before I move on. Powell equals lame duck. Yeah, it's a lot of lame duck. I'm most terrified of the lame duck, honestly. The lame duck is the one you got to be afraid of, you know, because you don't. Their incentive structure is harder to understand. I would much rather prefer somebody who's running for office in a few months or years, because I understand their incentive structure. A person who's going to ride off into the sunset, they'll do anything. They're liable to do anything. And that is terrifying. He needs a good black eye. Then he will lower rates 50 basis points in July. Not happening. Mark, 100. I'll bet any of you guys, they're not moving in July. But you know what's wild? If they did cut by 50 basis points in July, you guys would be so scared. You'd be like, what do they know that I don't? You'd be wrong for thinking that because they don't know anything. But you guys would be terrified. Catan says, the Fed needs one tech, one admin, and one dog to watch the tech and admin. Bro, they don't even need that. Fed Reserve has 2,500 employees. Yeah, I knew I was off by a factor of 10. Thank you, Emmett. 2,500, not 25,000. My apologies. But it's insane. 2,500 employees at that institution. 2,500 PhDs to tell you what the bond market will tell you for free. Insane. Nicholas says, Grok says 24,000 employees. So now we got a bit of a problem. Emmett says 2,500. Grok says 24,000. I thought I saw the number as 25,000. We'll keep going. Silver up to 37.80, baby boys and girls. I love everything about this silver move. Somebody was heckling me on, I think somebody was heckling me on Twitter saying, I hope you're short silver or something like that. I'm like, no way. What are you, crazy? Big move in silver, up more than 1%. And I love everything about it. If silver's not careful, it's going to establish a new range. So we had some consolidation between 36 and 38. And if we're not careful here, you're gonna get a little bit of a breakout and establish a new range. You know, we had this range between 32 and 34 that we didn't break out for like 2 months, then instantly establish a new range between 36 and 38. And I would love a nice little move up to 39 and establish a new range between 38 and 40. I would really love it. Donisky says it's 24,000. I told you, 25,000. Can you believe that? Okay, don't just throw the number out there. Really, think about this idea that the Federal Reserve has 25,000 employees. Think about that. There's 25,000 people making horrible choices. There's 25,000 PhDs who don't understand the concept of money. How can there be 25,000 smart people who lit your money on fire and increased M2 27,000 or 27% in 1 year? How can there be that many people with that many bad ideas? All right. I don't know. Maybe they'll come around one of these days. Energy, the third most performing sector on the day. Yes, Catan. Bitcoin at 116,000 because there are 25,000 people at the Federal Reserve who are lighting your purchasing power. Okay. This cannot be overstated. Let me say this. Okay. The Federal Reserve has two mandates. Two: maximum employment and stable prices. And unemployment is going up. Okay? Unemployment claims, everything, all that stuff's going up. And it's going to head up until we get to 5%. And when we get there, the Federal Reserve is going to say, oh, we have this new natural rate of unemployment, which is higher than it was previously. They'll justify it, but make no mistake about it. Unemployment is going higher. And also, Your prices are not stable. And it took 25,000 people to not to not make good on any of those two mandates. 25,000. Took 25,000 people to light your purchasing power on fire. It took 25,000 people to get the dollar weaker by 10% year to date. Took 25,000 people to double the price of the median price of a home. Took 25,000 people to increase the price of eggs. I mean, it was avian flu, and maybe I should really be blaming some other portion of the government, but we just never talk about that stuff. How bad are you allowed to be at your job? Anyway, Ethereum up 6.5% on a close over close basis. Got up to 3,200 before falling to 29. And I still think, some weird part of me, I'm dumb long silver. I'm glad I'm dumb long silver, and some part of me thinks it's still not the right moment to get short gold. All right, let's see what you guys. The regional Fed offices handle money transfers, ACH processing, and enforcement and supervision activities. Yes, correct. When tulips, bro, chill. The Federal Reserve is trying to solve unemployment on their own. That's true. If Microsoft fires you, the Federal Reserve will hire you, is what they say to say. Which is another thing that's absolutely wild. Unemployment ticking up. We're not really adding jobs to the economy. Microsoft laying off 9,000 people because they created an HR bot that took all their jobs. But I'm supposed to believe that AI is going to be additive. It's going to add jobs. So many more jobs. I don't know what's wrong with people. They can't see the evidence that's staring them in the face, And when I tell people that this is clearly going to lead to less people in the labor force, they say, Victor, you're a pessimist, and when we invented the car, that it put a lot of people out, the horse and carriage, put a lot of those people out of business, but it created a lot more new jobs. And I go, yeah. But this is very different. AI can learn, and AI is learning, and it can learn at a faster rate than a human being. And that's a problem. So it's just which coin are we buying to try to save ourselves? Palantir caught an upgrade, I think, today by Dan Ives' company. They moved, if I'm not mistaken, they moved their target from 140 to 160, something like this, their price target, up to 160, which you kind of have to do after the stock already eclipsed your 140 price target. Why can't these guys ever be bold? Dan Ives wears crazy stuff. I'd love for him to be like, you know what? I'm moving my price target to 110. Be a trader. Then wait for it to come down, then move your price target up to 160. That's what I'd like to see. Isn't it wild? Isn't it wild that I was actually joking when I talked to Nick about buying the dip. This basically it was like down 9% one day on a Friday, and I asked Nick, "Would you be buying the dip here?" And it was like a tongue-in-cheek thing, you know. But I was halfway serious that like they're not going to give you a gigantic dip in Palantir. This might be the only thing you get, and it was. That was the low. That 9.5% dip to 130 was effectively the low, and it's been up almost every day since. All right, give me a second. Victor, your nose is growing. Peter Schiff be like gold, oh well. Yeah. Tulip NFTs. Just say it says I should apply for a job at the Fed so I can get paid for being bad at economics instead of doing it for free. Let's do this. Let's have a little fun here. Recession or no recession in 2025? I want all of you to answer. Recession or no recession in 2025? And while you guys are answering, I'll give you my thoughts. And my point of view is that it doesn't matter. I think trying to call the recession in 2025 is it's a loser's game. And I'll tell you why. Because if you're wrong and there's not a recession, well, you're going to be wrong on everything. And if you're right that there is a recession, I do not know that means lower asset prices. I think a lot of people convince themselves of an old playbook. And some part of me believes that like post-COVID response, we're sort of in this completely new world. And so you can go back and you can use the last 30 or 40 or 100 years worth of data. Some part of me thinks there is some correlation back to like the 30s or 40s, some correlation back to the 70s and 80s. But I think we're in this whole new world now. And when you're running 7% deficits, if you go into a recession, what ends up happening is like the government actually has to increase their spend. They have to increase the amount of money that's going in from getting transferred from straight money printing into the private sector. And I don't think that's fully appreciated. So I think like even if you get a recession, which I think at best is, let's call it 50-50, if you get a recession, then there's only a 50-50 chance in that world, I think, that you get lower asset prices. Which means the betting on the recession plus betting on lower asset prices is like a 25% bet at best. I think it's a sucker's bet. Let's see what you guys are saying in here. Fiscal dominance, exactly. Bunch of people saying no, no, no. And the thing is, all of you guys betting no recession, which I actually think is the more likely scenario. I think we're slowing down. I don't think we'll see a recession, and I think they are going to print an ungodly amount of money and already have. They're telling you and showing you what their plan is. And I think if you don't understand, like betting on a recession and like asset prices going down. Like, do I think 6,300 is extended? Probably. Could we use a 5 to 10% correction? Sure. But because most people probably think that way, you're probably not going to get a 5 to 10% correction. You get like a 2 to 5% sell off in like a few days, and then people will buy it up. And I think that's the environment we're in. And I think in that environment, real assets are going to do really well. I'm not selling silver. I wouldn't fade gold, which is why I didn't play the gold silver ratio. Like, if you wanted to play the gold silver ratio, what you would have done is you would have bought silver and you would have sold gold. But I don't like the idea of fading gold at all, so I just bought silver. And I'm long silver for that reason. I bought, a couple of months ago, I told all you guys, I liked the miners. I liked Freeport McMoran. I liked anything that tracked a hard asset, because I thought we were in a position where we're just going to have to create funny money. And in that world, your hard assets become more valuable. So I liked energy stocks. I liked utilities. I like nuclear, and I like the miners and metals. All this stuff's doing well, man. Could I have saved myself a lot of pain and just bought NVIDIA? Sure. Sure. Catan says, just pay attention to SOFR spreads. If they turn negative, it's not going to happen. Soul Train says, a tax break with Medicare cuts is the answer. Is the answer to what? I'm very disappointed in that bill. I cannot believe it passed. As soon as it passed the House, I knew it was going to pass, and I said it on the show. I said, I think I was talking to Chris Vecchio, and I said, this is going to pass. They're going to tinker around the edges, but you can expect something that adds about $3 to $4 trillion to the deficit. And that's exactly what we got. $3 trillion added to the deficit, $4 trillion if you count interest. Brutal. Absolutely brutal. And you know what's wild is there's going to be less inflation there's going to be more monetary or asset inflation, but there's going to be less like grocery prices go up type inflation. And it's going to take a while for people to like realize that. I don't know why people don't understand how money works and how debt works and how prices work, If you send out checks to everybody, if you send $2,000 to everybody, guess what they're going to do with that money? They're going to bid prices higher because they're going to spend it. But if you don't send money out to people, you send it out to capital, guess what they're going to do with it? They're going to bid up assets. So we just went $4 trillion in the hole, and we weakened our currency by 10%. And I just think people they haven't fully appreciated what that means yet. They will, but they don't currently fully appreciate what it means. And you got these like fear mongers out there that are talking about recessions. It's like, bro, it doesn't matter. It does not matter. If you just depreciated your currency by 10%, I don't want to hear about your recession, your slowing growth talk. Get out of my face with that. It's because, and this has been my argument the entire time, The entire time, my argument has been nominal prices. Okay? You want to have a talk about recession? Okay, then let's talk nominal versus real. The real price of an asset. Because nominal prices are going higher. When you're devaluing your currency, nominal prices are going higher. And I think that's really tough concept for people to wrap their minds around. But they're going to get it eventually. All right, let's look at a couple of these. I think labor force this is what Kilgore, how are you? New name in the chat. I think labor force participation drops off a cliff. Everything gets tokenized, dollar crashes, and we get a dual scenario of depression at the low end of the class curve and a boom, except for real. Yeah, I think what happens, it's like this wild thing that's happening, which is how far can you stress the K? So the K is the working class in America are really already in recession, but an asset owning sort of like upper 30% of the country is doing well, really well. The prices of their assets are going higher at all-time highs. Their S&P 500, their Bitcoin, their real estate prices, prime real estate I'm talking about. All that stuff is doing relatively well. On paper. Labor force participation drops off a cliff. I think that's true, but I don't know how well labor force participation is tracking like gig work. A couple of people, I've brought up labor force participation to a handful of people, and every time they throw back the gig work in my face, and I don't really have a good argument back to them. Brian says, I thought their goal was to reduce the deficit. Honestly, Brian, what I think happened, I think they had a couple of different paths. And if you go back to some of the shows that we were talking about in early April, my question was like, what is the out? That's what I kept asking myself. What is the out here? And eventually I sort of, there's a moment on air where I realized the out is just spend. It's devalue and spend. So you try to go the route of, I'm going to tax or I'm going to tariff. You try to go that route and the market just wouldn't allow it. And so you pivot into something that the market is seemingly going to allow, which is to cut taxes, to spend, and to grow our way out. Such a big joke. I can't believe we allow that saying, we're going to grow our way out. Theta Trader says, and all this stuff, I think eventually has led to inflation. We might get a rate cut, but years out, the base rate is higher. Staying out of ZB and TLT for that reason. I don't think you're wrong, Theta. But I don't know why I think this. I think the spookies, the scariness about being long, the long end of the curve, I think that's over. And I think the administration pivoting into the Genius Act, I think the whole stablecoin thing, I think it's an attempt to create new artificial, but ultimately new demand for the long end. I think they're going to adjust the supplemental liquidity ratios, so the SLRs, to allow banks to hold more of this stuff because they need banks to hold more of this stuff. So they're going to, and Besson has already talked about doing it. So I think they've got a lot of things that they can pull, a lot of levers that they can pull. So do I agree that we're going to issue a bunch of new debt? Yes. But I also think we're going to change the game to allow banks to acquire more debt, to hold more debt on their balance sheets without penalizing them. And I also think we're going to create new innovations in private stablecoin markets, which will create artificial demand for the short end of treasuries. Probably not long end, but like the short end treasuries. So I'm not as bearish. I'm not as bearish on the long end. I actually think rates are going to go lower, and that's one of the biggest reasons for like the home, why I think home builders are a really interesting bet. And for some reason, I don't know if I'm wrong, and I could be really wrong here and misreading what's happening in the home builders. That could just be short covering, like rapid short covering right now, and then you're going to get new shorts at higher prices, and then home builders could go lower. Totally could be what's happening right now, and I'm misreading it. But I actually think the worst case scenarios in the long end, I think they're being covered right now. Yeah, I think they're being covered. All right, my friends. That's gonna do it for my pontificating. But I still like silver at 37.80. I don't think it's a great buy here. But it does look like it wants to plumb higher to a new range. I wouldn't put an incremental dollar into silver, but I am letting all my silver chips, I'm letting it ride here. Same with Bitcoin. I think this is going to find 200,000 before it's all said and done. I'm in IBIT, dumb, out of the money, upside calls, which are now almost all in the money. I was long out of the money 60s, 65s, and 70s. And I'm going to have to go find some even more out of the monies here. Because IBIT is basically, my 60s are $5 in the money. My 65s are at the money. My 70s are knocking on the door of being in the money. All right, everybody. If you want to follow me on Twitter, you can do so at Victor Jones. Owen Jones is 0 because I like to be difficult. This is Synthetic Friday, as you know, which means we won't have a show tomorrow, but I will be tweeting up a storm, so follow me on Twitter if you want to, not just tomorrow, but over the weekend as well. I'll see you back here next week, same time, same place, same great network, only on Tasty Live. Until then, I'll see you next time. Peace.